First chapter is AS4. I hope that all of you would be knowing about the syllabus that you have, just for the purpose of knowing about the contents that we have in the syllabus. We have module number 1, which has got application of accounting standards. Chapter number 2 is partnership accounts. Module 2 has got ESOP. Chapter number 4, buyback of securities. Chapter number 5, amalgamation of companies. 6, reconstruction of companies. 7, liquidation of companies. Module 3 is about banking company, NBFC, and lastly, consolidated financial statements. Okay. These are the 3 modules. Now let us just strike firstly with application of accounting standards. Under that, we have firstly AS4, revise contingencies and events occurring after balance sheet date. Contingencies and events occurring after firstly we should know an accounting year is expected to be, say, from 1st of April 22 or 21, and it will go up to, say, 31st of March 22. Say events of that particular year will fall in the same year. The circle small notes that I'm just developing were all events for that particular year. And some of these events related to this or some of the transaction related to this might fall in the next accounting year. Maybe these 3 events may be related to the year 21-22. And that year's 22-23's events might also be occurring. And at one point of time, all the transaction financial statements will capture. All the transaction financial statement will capture and auditing will be conducted for 21-22 in the accounting year 22-23. And there is going to be something called as date of approval on the date. When the audited statements are presented, they will say, yes, this is correct. And after that date also, some transaction related to 21-22 might also occur. Whether we will capture only this and ignore this, or capture both, or ignore both, or ignore the first one and capture the later. Which one is appropriate? So firstly, we should understand that events related to an year may events or transactions, whatever name through which you call. Events or transaction related to an year may fall in the following year. Correct? But those events which fall before the date of approval alone is focused as events occurring after balance sheet date. events occurring after the date of approval are ignored from the scope of AS4. So, what are the important conditions? Events related to 1 year will fall in the following year, but before the date of approval. Even on the date of approval also it's okay. But ideally speaking, before it is approval, because on the day of approval itself, when event is there, it becomes impractical to capture. So, events occurring after balance sheet date for which it should be related to 1 year, would have fallen in the next financial year, but before the date of approval of accounts related to that particular concerned year. Events which are occurring after the date of approval will be ignored from this particular accounting standards. Firstly, we know what is events occurring after balance sheet date. Why this is to be given importance is that it is related to a particular year. Just because it had fallen in the next year, you cannot consider that as an event for the next year. Now, events occurring after balance sheet date in which you have two different types of events. You classify one as adjusting event, the other one is non-adjusting event. The treatments are different. Adjusting events are adjusted in the books. Here, not adjusted in the books of accounts. What do you mean by adjusted and what do you mean by not adjusted? Adjusted would mean will be incorporated in the books of accounts as though the events occurred in the financial year itself. Had these events had occurred in the financial year itself, what treatment we would be giving? That treatment is what we call it out as adjustment. Correct? How to identify them as adjusting event and how to identify them as non-adjusting event, we will separately discuss. Non-adjusting events are not to be adjusted. Then what is that way out? Then the next question is that will that event affect going concern concept? Will that be affecting going concern concept? Yes, as well as no. If it is affecting the going concern concept, then redraft the balance sheet. Redraft the financial statement. There is no meaning in carrying a balance sheet and P&L account just like what we normally do for going concern. If it were to be no for that question, disclose in the director's report. So disclose in the director's report those non-adjusting events. Of course, we have an exception. What is an exception? Exception to this one. What is an exception? If the event is a statutory one, it is a statutory one, where Government of India is telling that ESI should be, PF should be increased to 15% retrospectively. Mere disclosure will not be sufficient. It is better in practice, a prudent practice that it should be adjusted in the books of accounts. Even though it is non-adjusting, falling under exceptional category, it should be adjusted in the books. If the event is a statutory one, adjust as if the event occurred in the financial year itself. That's all. Accounting standard is over. Now, how do we identify the events as adjusting or non-adjusting? How to identify the event as adjusting or non-adjusting? Firstly, it shall be related to an asset or a liability. Events occurring after balance sheet date should be occurring balance sheet items only. 2. Condition of the asset or liability on the balance sheet date is the condition of the asset and liability on the balance sheet date was fluid and the event occurred subsequently confirms the state of the asset. What is that? Condition of the asset or liability on the balance sheet was fluid. Where there is an, what do you mean by fluid? There is an uncertainty. There is a firmness is missing. This is the one we can't tell. Was fluid and the event occurred subsequently confirms the state of asset. No. That clarity which was not there, now you have brought out clarity. Because of that clarity, you are in a position to decide upon the value of the asset or liability on the balance sheet date. Correct? So, the state of asset or liability, this is what we call it out as condition. So, what is the condition of the leader? Condition of the leader in the hospital is dangerous but stable is what they say. What do you mean by that? The condition of the asset, the condition of the leader admitted in the hospital is in danger but stable. What do you mean by that? His health condition did not deteriorate. It is at a particular level. If that particular state is improving, he is improving is what they will be telling. So I am unable to decide or unable to tell about the position on the balance sheet date. Correct? It is something like a leader was admitted on 31st of March. On 15th of April, he got discharged. So, subsequent event confirms the position on 31st of March. Correct? 31st of March, condition was not good. 15th of April, he passed away. Now you can understand what position, uncertain position, because of this event, you are in a position to say anything about that. This is what you say as a condition should be there. Condition of the asset or liability where it was uncertain. There is another example I will tell. The leader was very nice on 31st of March. There was no admission of that particular leader in any hospital, 15th of April, he collapsed all of a sudden. In all the cases, 15th of April is what I have taken. All of a sudden, he collapsed. In the public meeting itself, while he was seated, he collapsed. So, this event to 31st of March, I am not in a position to connect. Are you understanding? So, 15th of April, he passed away. But 31st of March, he was stable. He was running marathon. He participated in many meetings. Now you can understand. People used to say, 31st of March, he ran marathon. Non-adjusting. 31st of March, he was in the hospital. He passed away on 15th of April. What is that? Adjusting event. Correct? No. Now you can easily understand matter. Now I will give you a case study. What is that case study? Now I will put it in Excel. Now I will type out a case study. A customer informs your company by 10th April 23 that his company has filed voluntary liquidation in the appropriate court as its factory was gutted by an accidental electrical short circuit, and all the assets in the factory was damaged, was destroyed. Right. So the question is that whether this event shall be recognized as adjusting or non-adjusting. How will you answer to this question? Yes, Deepak Raja. See, there are two possibilities. Possibility number one, accident might have occurred on or before 31st of March, but customer informed our company only by 10/4. Correct? The other possibility is, possibility number two is accident might have occurred on or after 1st April, and customer informed only by 10th of April. So both are having different meanings. Correct? No. So in the first case, how will you answer to the questions? For this sort of theory questions, how will you answer? This is the presentation you have to take up. There are 4 stages you have got to take up. 4 different steps you have got to take. Consciously you have got to do. First and foremost thing is that you have got to tell that this is an event occurred after balance sheet date on the assumption that the date of approval is post 10th April 2023. Correct? We do not know. There are companies, they would just finalize it even before that. I am assuming it is an event occurred after balance sheet date on the assumption that is okay. So firstly, I have identified that it is AS4 problem. It is to be understood. It is to be understood that the condition of the asset regarding the recoverability was uncertain. Even though our company did not know the fact of accident, you may be a sleeping guy. You are not at all knowledgeable. You are not at all reading. So to classify a matter as or to take the condition of an asset, it is not based on your knowledge. You may refuse to learn. You may be a dull-headed person. You may be a lazy person. You can score any bad thing. That is not the basis on which something will be decided. Universally, yes, you are not knowledgeable, but it was there. So it is to be understood that the condition of the asset regarding recoverability was uncertain, even though our company did not know the fact of accident. It is. The event is the application of voluntary liquidation. Voluntary liquidation and not the accident. The event is the application of voluntary liquidation and not the accident. Correct? Because of the accident, there was uncertainty on the balance sheet date. So it is an adjusting event. The company is expected to provide to the extent of uncertainty in the recoverability of the debts. That's it. Next. What is the next one? This is going to be the same. Here, it is understood that the condition of the asset regarding recoverability was certain on the balance sheet date. Was certain on the balance sheet date. Hence, it is a non-adjusting event. If this amount of default were to cause where to affect going concern, where to affect going concern. Then redraft the financial statement, or else disclosure shall be made by board of directors. Correct? This is the way you are expected to finalize. First thing you got to hit the nail on the head. What is that? Which accounting standard? What? Try to analyze the provisions of that particular standard. And third, you connect that provision with the event. Lastly, conclude. That is what we have done. It is to be understood that the condition of the asset regarding recoverability was certain on the balance sheet date. Why? Because accident had occurred on or after 1st of April. That is what I told you, no? You remember this particular example. The leader was hale and healthy on 31st of March. Why I should quote that particular incident here? He was hale and healthy. Suddenly he collapsed. So some people used to tell, no, say a person collapsed. Hey, that day itself he was very sick and he was very tired. Hey, our partner passed away on 1st of May. The previous day he had fallen sick. Next day he collapsed. Few months back he went to Sabarimala in the long path. There was no symptom at all for that person. He was hale and healthy. No amount of sadness you could find in his way of approach. All of a sudden passed away. So I would like you people to make note of this. So the entire accounting standard AS4 is over now. That's all. One example finished. Come on, kindly make note. Kindly make note. Note, note, note. Note, please. If you have copied, please let me know. Is it okay? See, now I would consider that AS4 is over. Now, what is it that is left for us to try? So, on X, in X Company Limited, theft of cash of 5 lakhs by the cashier in January 2021 was deducted only in May 2021. The accounts of the company were not approved by the board of directors of the company. Decide whether the theft of the cash to be adjusted in the accounts for the year ended 31st of March 2021. See, now you can understand that it is something like a person who died of cancer. But on 31st of March, the cancer was there, but you did not deduct. Your knowledge on the subject matter is no matter to decide as whether the condition of the asset on that particular day was uncertain or not. Your knowledge, you are sleeping. So on that day, the cash position was wrong. You are sleeping. Right? So therefore, number one, reduction has happened after 31st of March, but matter related to the last financial year. So before approval, firstly, it is events occurring after balance sheet date. Number two, you have to talk something about the condition of the asset. Condition of the asset was bad. Three, it is to be classified as adjusting event and it should be adjusted in the books of account. So cash balance should be reduced. What did they say? May require adjustment if a fraud of the accounting period is deducted after the balance sheet, but before the approval, it is necessary to recognize the loss amount to adjust the books. But they have not conveyed it in the way in which we are dealing. Our answer is superior. Fraud deduction happened after balance sheet date, but before approval. So it is AS4 application. Number two, the condition of the asset was uncertain. Condition of the asset is uncertain. Deduction confirms the uncertainty on the balance sheet date. So it is adjusting event. Over. That is the way you got to tell. An earthquake destroyed a major warehouse on 20th of May. The accounting year 31st of March. The books of accounts are approved on 30th of June. The loss of our earthquake is estimated to be 30 lakhs. State with reason whether the loss due to earthquake is an adjusting event or non-adjusting event and how the fact of loss is to be disclosed by the company. They themselves had given the answer to the question. In question itself. How the matter will be disclosed is what they have stated. How the fact of loss is to be disclosed by the. So, by 31st of March, the condition of the asset was good. Accident took place only after that. Certainly, it is non-adjusting event. We are expected to disclose. Now, I would like you people to write the answer for question number 1 and 2, and I will just join in 5 minutes time. Okay, thank you. Say for illustration 2. Now I will try illustration. Point number 1. The event is the earthquake. This occurred after 31st March, but before date of approval. Hence, it is an event occurring after balance sheet date. Correct? 2. Say something got damaged. It should be either an asset or liability. Major warehouse. The condition of the warehouse on the balance sheet date was perfect. There was no connection between the event of earthquake and the condition of the asset. Correct? Are you understanding? No, firstly, we will address this. It is a non-adjusting event. What is the treatment for non-adjusting event? What is the treatment of non-adjusting event? If the event is likely to cause damage to the going concern concept of the entity, then this is the only warehouse that they have. Because of the warehouse, the company itself is likely to come to problems where they cannot continue at all in the future. If the event is likely to cause damage to the going concern concept, then redraft financial statement. Or else means it is not affecting going concern concept. Disclose as a part of board of directors report. That's over. This is the way you got to write. They will award more marks than for this much or this clarity at which nobody would have done this. See, not that I wanted to tell, I am very great. Simple and straightforward. So I got to tell. See, what is that I got to tell? I am L. Muralidharan, chartered accountant. I qualified at the age of 21. Today I am 57, close to 57. I got to tell only that. 1, 2, 3. Oh, it's not that I am 21 today. I qualified at the age of 21. Today I am 57. So almost my professional life is more towards teaching only. I am very happy to do that. Simple, straightforward. I have not attended to any class. I had all this confusion and all that. They will be telling whether it is favorable or unfavorable and all that. While you discuss the favorable or unfavorable, you should be unbiased. Report everything. Adjusting event, adjust. That's all. Matter over. That's it. So the entire accounting standard is over at this stage. Any number of problems that you work, it is going to be like that only. So now illustration number 3. Now let's just go through illustration number 3, 4, 5, 6, 7. 7 items you have. We will finish off all this. On what basis you will finish off all this? Now I will develop a template for you. Template. Check. Yes, no, conclude. Now template is developed. Template is developed now. Number 1. What is the event? What is the event? When occurred? Next, occurred before the date of approval. What is the event? When occurred? Occurred before that. If it is yes, this if yes, proceed to step 4. If no, conclude that it is not an event occurring after balance sheet date. Correct? Step number 4. Condition of the asset or liability on the balance sheet date. If is there any connectivity between the event and the condition of the asset on the balance sheet date? Yes, would mean it is an adjusting event. No would mean it is not, it is a non-adjusting event. If it is an adjusting event, sorry, if it is a non-adjusting event, if it is a non-adjusting event, inquire as whether it will affect GCC. If yes, suggest redrafting, or else suggest disclosure as a part of Board of Directors report. If it is an adjusting event, adjust in the books of account. Matter over. That's it. Now template develop. Now we will fit any number of problems. You can do any number of problems. Matter over. 100 problems you do same thing. That's all. This is the way Big Four they are working. Why Big Four students are never will commit mistake? Because they have a checklist. In all other firms, they will teach, they will scratch their head. That's it. Systematic learning is very important, my dear. Systematic learning is very important. So what I find is, it is not that a person studying from a particular coaching class alone will win. I never went for any coaching class for intermediate. Favorable or unfavorable, you just don't worry. This is the way. Now we will take up. A company has filed a legal suit against the debtor from whom 15 lakhs is recoverable on 31/3. The chance of recovery by way of legal suit are not good as per legal opinion by the council by April. Can the company provide for full amount of 15 lakhs as per provision for bad and doubtful debts? So the legal opinion is the event. They have not conveyed the date of approval. So we will assume the date of approval is later only. So therefore, it is events occurring after balance sheet date. What is the condition of the asset on the balance sheet date? It was not recoverable because suit was filed against the debtor which was recoverable. When suit was filed, that there was a dispute on that particular item. So there was some uncertainty that you have. The legal opinion that you get after this, that is by April, confirms a position about the item which was uncertain by 31st of March. Now that you are now this event can be connected with the condition of the asset. So therefore, what is the type of asset? What is the type of event? That's it. Matter over. We did not know. That is what you just find that they have given. Illustration number 4. In preparing the financial statements of R Limited for the 31st of March 20X1, you come across the following information. State with reasons how you would deal with this in the financial statement. The company invested 100 lakhs in April before the approval of financial accounts. The board of directors in the acquisition of another company doing similar business, the negotiation of which has been started during the year. So, the company had invested in April 20X1. What is the event? Investment is the event. And it had that is, it occurred before the approval. So, whether this event has got something to do with any of the asset or liability on the balance sheet date. You have to tell yes or no. You cannot be nodding your head like that. How? You are investing after the balance sheet date. I am trying to connect this event with 31st of March figures of any of the assets and liabilities. So answer to that question is that I have bought something on another company, and on 31st of March, I cannot connect with any of the assets and liabilities there. There is no connectivity at all. Therefore, it is non-adjusting. Will this be affecting going concern? No. We are expected to make disclosure only. Okay. Negotiation will always be happening, no? So, girl boy seeing will always be there between two families. They will see. They will have soji baji and all that. Exchange of WhatsApp and all that. Exchange of mobile also will bring into problems. So, what is that they have communicated? Should only be disclosed is what they stated. That means they have, indicated that it is non-adjusting event only. That is what they said. You just see, no adjustment to assets and liabilities required as the event does not affect the determination of the condition of the amount stated in the financial statement. Template is working. A limited company closed its accounts by 30th of June. Accounts for the period 20th of August, laying a pipeline of an oil company deep beneath the earth while doing the boring work on 1920X1. It met a rocky surface for which it was estimated that extra cost to the extent of 80 lakhs they will be incurring. Firstly, number one, it is not an event occurring after balance sheet date. Why? Because they have done with the pipeline on this date. Which date? 1921, whereas your books of accounts were approved by 20th August itself. Okay. Now, you will always be having one problem. What is the problem? Though the condition of the asset was not there, there is no way I can report in any place. Reason is books of accounts already got over. Therefore, there is no scope that I can go for disclosure. It is something like train already left. How can I just fight with anybody whether I have to concede my lower berth? Train already gone. What is that they say? So it is not an event occurring after balance sheet date. Matter over. Matter over. So you convey the answer as they are expecting. It will be considered in the next accounting year or not. That is not stated in AS4. What is not stated in AS4? Why do you tell? Hey, whether this mail is related to you. One courier boy is asking, no, it is not related to me. That's all. This is related to that particular house. Go to the right turn, go to the left turn. Why should I tell? I may tell to that particular courier man because he's an old man. He did not even know. I will be very kind to do. Yes, for I will to be very strict. Next, question number 6. While preparing its final accounts for the year ending 31st of March, a company made a provision at the rate of 5% on receivable. Last week of February, a trade receivable had suffered heavy loss due to earthquake. The loss was not covered by insurance policy. In April, the trade receivable became bankrupt. Can the company provide for full loss arising out of insolvency? Answer to the question is yes. In fact, this is the one that I put in the Excel. What was the event? The event is he turned bankrupt in the month of April. Condition of the asset on the balance sheet date was doubtful. This bankruptcy can be connected with the doubtness that you had by 31st of March. So connect it with that, and therefore it is adjusting event. You got to provide. You know, this answer they are giving for earthquake. Anyway. Correct only. No, it is should be made. Full provision should be made. Say one paragraph they are adding. If earthquake had happened after 31st of March, like how we did know possibility 1 and possibility 2. So here I said short circuit. There they say earthquake. Both are electrical short circuit. E. Electrical short. There earthquake. Also E. During 20x1x2, Raj had sued by a competitor for 15 lakhs for infringement of a trademark. Based on the advice of the company's legal counsel, Raj Limited provided a sum of 10 lakhs in its financial statement for the year ending 31st of March X2. On 18th May, the court decided in favor of the party alleging the infringement and ordered R Limited to pay agreed sum of 14 lakhs. Books of accounts are approved by them on 30th of April 20x2. What is the event? Event is the court had passed an order against the company. By 31st of March, there was some problem that you are having. You yourself prepared to pay 10 lakhs. If you have already provided 10 lakhs, additionally you got to provide 4 lakhs. Adjusting event only. You just see, should adjust for upward revision of 4 lakhs. There is no question of contingency and all that. So that will come in AS29. We will do it with separate discussion. Are you clear now? Matter over. Yes, over. Any number of problem, template is there. Have you made note of the template? Where? All 6 steps you noted. Matter over. So we will stop at this moment.